Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host, Anthony Smith, and I'm also lead economist here, and I'll be giving a shipper econ update today. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland. Looking at our outbound tender rejection indexes for both van and reefer, we can see that the reefer index continues, of course, to outperform the van as it is a much more volatile sector, 41.78%, but it does continue to decline into the new year. A little bit of a peak. You can see that peak there around Christmas was lower than the one around Thanksgiving for the reefer rejection. So starting to see the reefer side settle down a little bit quicker. The trend line is certainly down for reefer. Looking down here at the van outbound tender rejection index, we can see we're also in decline, 24% right now. One of the lowest levels since about middle of October or so. Still not breaking through that boundary that we would expect to see if the market were shifting significantly. The trend line is starting to look like it might be turning slightly downward right now, but certainly not anything to start to think that the market has shifted significantly in that regard. Looking at our outbound tender market share, this time of year we start to check on and see how things have shifted over the weeks, over the years in terms of overall volumes. These are the anything that accounts for over 1% of the total tender volume in the United States. On this chart right here, see it, Atlanta accounts for about 4% of the total outbound freight volume right now. We're down there, you have St. Louis, just over 1% of the total freight volume. So this is kind of a map to look at if you're looking for, where are the shifts in volume? Where's the shifting demand? Especially if you're trying to make sure that your utilization stays high. You want to make sure that you're capturing, putting enough trucks in these markets. Denver, for instance, very volatile market here over the last year where we have volumes going very high at certain times and then they come back down. Not necessarily a market that carriers like to go into, but there are certainly better times of the year for the Denver market. Looking across this map, you can see a 6.2% increase in the Houston market. Houston, Texas, a top 5 market right now in terms of total volume moving through the country. So let's check out Houston real quick. We've got our outbound tender rejection index for the Houston market, 21.69%. You can see a huge jump in tender rejection rate here over the last couple of days or so. And again, we had a huge spike right around Christmas that jumped up. We're not quite right where we were around Christmas, but we're very, very close, just under that 22% range and 21.69%. Looking over at the outbound tender rejection index lanes, these are the largest lanes out of Houston, according to our data. And you can see Columbus, Houston to Columbus, 26.97% tender rejection rate. You can see several of those lanes have jumped up here over the last day or so. Houston to Atlanta, one of the largest lanes, 25.6%. So certainly these are going to be the lanes that you're going to see the heaviest spot market activity, increased rate pressures, etc. Although Houston to Columbus, even though it does have a high rate of rejection, it's starting to come down a little bit. So high rates with a little bit of downward pressure here day over day, but it's probably not going to change it significantly. But if you are looking to spot market, these lanes up here in the top left are going to be the ones that you're really going to watch. Looking at some of these lanes right here, these are the largest lanes. Houston to Memphis, you can see in the blue line taking a huge spike up, probably a big reason that we saw it in the overall outbound tender rejection index. And here are some of the other lanes you can see. Some of them are actually coming down. So, for instance, Houston to Columbus, like we said, coming down out of a big peak around Christmas. But Memphis shooting up. Looking at our lane signal real quickly here. This is one of the tools in Sonar that we use to measure lane activity. And we can see that, we've got a high score, lane signal score coming out of Houston, also a relatively high one going into Memphis. So it's probably not the worst thing to accept a little bit more freight going into that Memphis market, as we can see heavy volumes and increased pressure out of that market as well, leading to higher spot market activity. We do have some weather along the way there, though. So you can see there's a little weather system moving across right in the path if you are heading that way today. Of course, this is for freight moving in the near future. But again, Houston to Memphis market is one of the hottest lanes in the country today, and that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm the lead economist here at FreightWaves, Anthony Smith, and today we're going to jump into what the latest is for manufacturing and what we can expect going into 2021. So behind me, I have the ISM PMI, the Purchasing Managers Index from the Institute of Supply for Supply Management, and that in the blue line and in the green line, I have our Flatbed Outbound Tender Rejection Index. And so what we can see in the ISM PMI, the blue line, is that there was an overall upward movement for the overall PMI. And so as you all know, anything over 50 is indicative of expansion within manufacturing, while anything below 50 is indicative of contraction. So what this is telling us is that there is indeed expansion going into 2021. This was expected. What we're expecting for manufacturing going into 2021 is that there was momentum building throughout the year and that momentum is going to spill over into the year. So one of the areas that we really look for, as you all know, is new orders. And so in the new orders, we saw some upward movement into the mid-60s, not quite breaking that 70 mark yet, but showing some growth there overall. And so this is a positive sign. And so we're looking at the ISM PMI and we're looking at the new orders. That's really going to be indicative of what's to happen and what's going to happen with manufacturing and industrial production and things like that moving forward. And so that's going to have implications for things like flatbed trailer transportation and flatbed capacity. And so we're looking at this upward movement for the ISM PMI, the new orders, and all that good stuff. We're seeing that there is indeed momentum. Many outlets and respondents are reporting that levels are indeed above pre-COVID levels. One of the areas that they are a little bit hesitant about, of course, is those COVID levels and employment. So employment has been a little bit touch and go for a lot of sectors, and retaining those employers because of whether it be positive tests, facilities having shut down, and really kind of slowing up the entire supply chain. And so things like that are really kind of slowing up the overall process for some manufacturing, and that's been one of the biggest headwinds for overall production. One of the biggest areas that saw a lot of growth or upward movement was the ISM's manufacturing prices. This moved up just over 12 points on a month-to-month basis. And so this is well into expansion territory. And what we're seeing is that there was a pretty significant increase in a shortage, or there was a complete shortage for many materials. We're looking at manufacturing across the board. And so this shortening of, or this shortage of materials is going to really kind of put some upward pressure on that pricing, which could have some downstream effects. We're looking at pricing for manufacturers working with their outlets going forward. So there is a shortage of potential labor, and there's a lot of activity ramping up with that, and there is indeed another shortage for materials. And so that's really going to be some of the headwinds going into 2021, but there is some momentum building behind it overall. Next up, I have total construction spending for residential. And so I have that here in the blue line, and in the orange line, I have flatbed outbound tender rejection, of course, because those are going to be indicative of construction materials are going to go on those flatbed trailers, and that's going to really kind of help with capacity. And so what we saw was some upward movement for construction spending, especially for residential, and we saw overall growth for total construction spending, despite some downward movement for non-residential. Non-residential, of course, is going to be a segment that's going to be in decline going in throughout the year, especially for the next several quarters, as we see a lot more working at home and remote opportunities. So there's going to be some more momentum going in for construction overall, but a lot of it's going to be on the residential side as manufacturers and builders try to catch up into where demand is at now. That's going to wrap it up for this Shipper Econ Update, and that's also going to end this episode of FreightWaves Now. As always, you can check out all of our content on all your favorite streaming platforms, including Apple TV and Android devices. Thank you so much for tuning in, and we'll see you on the next episode.